Welcome back to Fraud Investigation and White Collar Crime. Today we're going to be talking about tax fraud and evasion. This is chapter 2 out of the book. By the end of this chapter, you should be able to define what a tax fraud is. You should be able to understand the difference between tax evasion and tax avoidance. That's a major difference that we're going to talk about. You should be able to identify different types of tax fraud. We'll talk about several different types. You should be able to recognize the difference between criminal tax fraud and civil tax fraud. And then finally, you should be able to understand the penalties for criminal tax fraud and civil tax fraud. So a tax fraud is nothing more than the intentional evasion of paying taxes that are legally due. The IRS definition for a tax fraud is an intentional wrongdoing on the part of a taxpayer with the specific purpose of evading a tax known or believed to be owing. So as we dig into that definition a little bit, we see that the tax fraud requires both a tax due and a tax owing and a fraudulent intent. So for those that are looking at prosecuting a criminal tax fraud, the two things that you're going to need are the criminal act and the criminal intent. And both of those are required in the definition of a tax fraud by the IRS. Now we're going to look at some different types of tax fraud. This is going to go on for 3 slides, and this is the first of the 3 slides. So a tax refund fraud. This is when an individual or a tax preparer files a tax return that they know to include false deductions or exemptions. So the key things there are, it can be the individual filing the taxes, or it can be a tax preparer filing these taxes. If both the individual and the tax preparer know that there are fraudulent deductions or exemptions included in the tax return, then they're both guilty of tax fraud. And it also includes it when an individual or tax preparer files a tax return in the name and or social security number of a person other than the person themselves and or their client. So if they're filing a tax return in the name or social security number of someone that is not them, or in the case of the tax preparer, in the name or social security number of their client, then that is also a version of tax refund fraud. Some of the other types of tax fraud include intentionally failing to pay your income taxes. That is the most logical form of tax fraud. Then there's this whole group of things called making frivolous tax claims. And some of these frivolous tax claims include when people are they're challenging the IRS's right to tax people on behalf of the federal government. That can be the voluntary nature of the federal income tax, distorting of the meaning of the word income. So not including, if a person doesn't include, say, their tips in their income, because they say that they claim that that's not income. If they distort the meaning of citizen, citizen of the United States. So we see this when sovereign citizens claim not to be under the control of the United States. There's also people who distort the meaning of United States to include just the District of Columbia and the territories of the United States and not the individual states. Then we see often the frivolous distortion of the meaning of person, being that if a person were to set up a corporation or some other entity and file under that, claiming that they don't have to pay taxes because they're not a person, is another frivolous tax claim and falls under the tax fraud statutes. And then distorting the meaning of employee, which we'll talk about in a little bit. But generally it means that if you're trying to say that you're not an employee of your own business, then you are trying to distort the meaning of employee, and that is a form of tax fraud. Each of these can be found in the IRS code, and the court decisions on each one of these showing that they are frivolous claims and not valid can be found right in the tax code. And finally, on different types of tax frauds, we have employment and payroll tax fraud schemes. This includes one called pyramiding, where the employer collects federal unemployment, Social Security, and withholding taxes from the employee and then underreports the workforce, so they just don't report as many employees as they collected from, and then they avoid paying taxes that the employer has collected from the employee, thereby defrauding actually both the IRS and the employee themselves. The employer also can outsource their personnel and payroll responsibilities. This is called payroll leasing to a third party. And that third party is then responsible for collecting and paying the payroll taxes of the employees. These third parties often pocket those payments and then go out of business. This is a fairly common fraud that we see in payroll leasing. And the last one is the employer pays the employees in cash and fails to pay unemployment, Social Security, and withholding taxes. We see this very frequently, where employers try to pay in cash to avoid paying taxes. The next three slides that we'll look at include, we'll cover the topic of criminal versus civil tax fraud. The main differences between criminal and civil tax fraud cases include the burden of proof that the government must meet and the range of penalties that the fraudster will face for violating these crimes. Some of the penalties for criminal and civil fraud, the difference being that criminal fraud, the cases are punitive. They can include, the sanctions can include fines and or imprisonment, whereas civil cases are remedial actions where the IRS will assess the correct tax and impose civil penalties as an addition to the tax, which will be monetary in their use as opposed to time of imprisonment. And then the final difference that you'll see in a criminal versus a civil fraud case is the burden of proof that's required for the government to prove in each case. The civil fraud cases, the government must prove fraud by clear and convincing evidence, and that is different than the criminal cases where the government must present sufficient evidence to prove guilt beyond a reasonable doubt. So those are the two burdens of proof required to convict someone on either civil or criminal fraud charges. Finally, as you can see, the references page of the PowerPoint include the two sections of IRS code that I used for this chapter. And so if you have any questions, don't hesitate to ask. The information is readily available, and I look forward to hearing from you.